Hello, folks. Welcome to another edition of Market Action. Our guest today will be John Najarian. Back from a nice weekend in San Diego. It was good to meet some of you guys. And while we were there, the Greek situation, as everyone knows, fell apart. And it's interesting to see what basically the VIX now is breaking out of this range it's really been in, and we're up to our highest levels since February. And it's interesting at this point kind of to see where the weakness is. On one hand, it's what we would expect, the international area really getting devastated. And we're seeing, the two most kind of debt-laden countries in Europe outside of Greece, are the two that are most associated with credit risk. Italy and Spain are leading to the downside. But we're just seeing this kind of broad weakness across everywhere, and we're seeing some of these areas like cybersecurity, down a lot. We're seeing, what's interesting is the energy sector just continues to show weakness. And when I was in San Diego on Friday, we were looking at some of the put action across the energy space, and we were seeing puts in stocks like Cameron. And several others, Weatherford. So it's interesting to see the continued sort of downside. To me, when you see the overall market getting hammered on something like Greece, that's something that it's really hard to play one way or the other. You can be positioned in terms of hedging. But in terms of like an overall bearish trade, to me it seems like energy remains a pretty good bet. This looked like it was trying to break up and against this downline, and it didn't. And now that it's failed, I think we're going to see some pretty nasty downside in the energy space. So I want to just kind of point that out because it's interesting to see the continued weakness today with energy remaining on the weaker side. Let me take a look here. You can actually see, looking at the different, on a sector basis, materials remaining weak as well. Now, we were warning about some of these names like U.S. Steel, some of these others. Hey, John.
Yes, David. How are you doing?
Oh, good. So, John, the VIX is up near 18, the highest level. At 3-4
Aren't you guys
months.
glad you didn't sell it down there when it broke 16 this morning?
Yeah, indeed.
I was begging people not to sell it. I'm just going, come on, guys. This is the idiots hit it after, it was up around 1650 last night, and then they just sat there hitting the futures, the VIX futures, all morning. And I just said, this is ludicrous. I mean, there's nothing better that's going on. In fact, there are probably things that are worse going on. Mm-hmm. So, in other words, don't give up that protection too cheap. And so hopefully most of our guys didn't.
So, John, how high do you see the VIX going?
I think we easily get over 20 here. But will I take it off? Yeah, I'll probably take off, from... If we were going into the final hour right now, David, and we didn't have some headline about, the Greeks are coming back to the table or something like that, I think we'd be up close to 20 right now. So we'll see where we are, whether it's 18 or whether it is 20 in that final hour. But, there are some reasonable, rumblings out there that could cause people to get nervous, could cause the folks that have volatility dispersion books to go out there and try to protect themselves. And I think those are the buyers that come in at the top. It's not going to be, believe it or not, it's probably not going to be retail that comes in.
Right.
It's going to be the guys that are forced to come in because they need to pick up some hedges after they shorted it on a ludicrous little pop just above 16.
So, John, I was reading your post you put up. It was really good. You were basically saying hang on to the hedges. You're basically going to sell the VIX when we see the Molotov cocktails and the blood in the street?
Yeah, exactly. And, I'm not rooting for that. But,
right.
Boy, anybody that didn't, and I think Mikey Yamamoto did a nice job sharing with you guys, some of the insights that he and David Russell and I talked about out at the Invest Like a Monster conference over the weekend. But 2012, we had literally 500,000 Greeks in the streets. They were throwing Molotov cocktails. They were, unfortunately, people got hurt in banks and in financial institutions when they were doing that. I'm sure a lot of policemen as well as some of the protesters got hurt. Not rooting for any of that, but it's just something that we are likely to see here because things are worse in Greece, not better this time around. And they did that when they had $130 billion, that basically to qualify for the $130 billion bailout, they had to agree to a bunch of austerity things. This time around, they're basically, going to vote, I guess, although it is, I think, somewhat meaningless, but they're going to vote on the 5th, but I think it'll already be over, most of it by then, and we'll see. But I believe they'll, of course, vote no. I can't imagine they step in and say, yeah, I want this. I think they'll vote no. And it's the only solution for them, really. I mean, the two possibilities are, number one, the lenders, the people that bought the bonds and so forth, they're, the people that believed in them or whatever, say that they want to forgive the debt or forgive some portion of the debt. So far, there's been a complete unwillingness to do that. All they've done is kick it down the road for the last 5 years. They've never forgiven the debt. They've only extended the time to pay it. And the other possibility is that the Greeks default. So it's going to be one or the other, and it might be a combination of the two, but usually these things, whether it's Stockton, California, or whether it's Detroit, Michigan, the way these things end is, the one side has to default, has to basically file bankruptcy. Now, the country won't file bankruptcy, but, by basically going the route that I think, and I think most of you think that they're going to go, that will be the net result. And then it's just a question of, then where do they get the financing for the rest of it, because they will agree to some terms with the creditors that are much better than anything they'll get prior to them defaulting.
So you mean they'll have to do less austerity? If for them, the game theory says the best thing is to default, and then they're going to get an easier deal after a default than if they do it before a default.
Yes, that's what I believe, David. But in the meantime, though, it's going to be very violent, not just physically violent over there, but it'll be very violent movements in their capital markets, and it will be tough times for them. But it's an unsustainable debt. We all know that. They can't pay 180% of GDP, back to these lenders. So what are they going to do? A, get forgiveness, or B, default. And I think it'll be a combination of A and B.
Okay, good. Well, first of all, I want to make clear that I was kind of half joking at the Molotov cocktails. John put that in the post, and I think he was also, the bigger thing is that, John, you're basically saying there's another push of badness in terms of this before it's done, in your view. Okay.
Yeah, and
good.
And I'm saying that when with CNBC here with Michelle Cabruza Cabrera on the ground over there, we're going to have cameramen, and so is every network going to have cameramen wandering around there, and we're going to be showing some of the worst scenes that they have there, and I think some of those worst scenes will be, unfortunately, some of the riots and people throwing, those Molotov cocktails or something else. So that's why I'm saying it.
The thing I don't understand is the whole idea of the European Union. It was supposed to be like the United States. In the U.S., back in our days in the 19th century, when one town failed, people left and moved to another. And the thing I don't understand is, when you look at when German unemployment is, why don't these Greek people just go to Germany and get a job there? I mean, that's kind of the whole point of creating an integrated economy. But
because they like living there. I mean, Greece is a wonderful place to live. So, I mean, I know we'd be answering our own questions if we just did that. But, yeah, that's why. They don't want to. Germany would cost them substantially more money. And because it is so successful, it's like, okay, I could tell a bunch of people that they should move to New York, but they can't afford to.
Yeah, well, anyways, it's just agonizing to watch something like this. Let's just move on to some of the things, because we are seeing some paper, John, today. Actually, I forgot to put this one up on my list. Southern Company has some call buying. You were taking a shot at this?
Yeah, I did. And it could be, David, that some of that is based on the Supreme Court ruling that went 5-4, basically saying the EPA and mercury emissions and so forth, they went too far. I mean, I'm simplifying it, but that's more or less the ruling, that they didn't have the power to do what they did, the Obama administration and the EPA. And so if they indeed roll that back somewhat, some of these utilities that still are coal burners and not just nukes, along with some of those coal stocks, will get some traction from that. And I think that's what people are betting on, as well as, of course, lower for longer on interest rates means that people will chase that 5% dividend.
So, John, actually, you brought me exactly on what I wanted to ask you about. You know, we basically have the Fed's, you know, summer break coming up, but we're going to have minutes from the FOMC next week. And then, you know, what do you think about interest rates here in terms of Greece and everything else?
I think interest rates still go lower, much like I thought volatility goes higher. Now that it's playing out, I think that it absolutely will, because I think the likelihood that we're going to see a technical, strategic, or outright default out of Greece is very high. And then I think the natural move by Draghi will be to increase the liquidity, and he's got a big amount of it that he could push in extra at any given time. He's not limited to 85 billion a month that he's said. I mean, he's limited to the 1 trillion euros that he's got in his pocket.
So, John, we're getting some nice pullbacks in the whole financial sector is weak today, partially because of Greece. Also, I didn't even put it up with the news in Puerto Rico. And then we also have, you know, we had a bounce in some of these stocks like MBI. It was interesting. These gave us some really nice upside in the weeklies, and then the stock just annihilated today. But what do you think? I mean, that's obviously a weird little financial, but look at like J.P. Morgan pulling back here, or Goldman. Have you been coming back to any of these names yet?
Not yet, but I do like them. I mean, and, you know, I didn't necessarily argue against Pete and the other guys on the panel, but what I think, David, is that we're going to see, you know, some sideways actions out of the financials, even though I think the table is set and the runway is there for them for the rest of this year, well into next year for higher rates. You know, not dramatically higher, but high enough that they will make more money. So that's why I want to be in those guys. I mean, my 4 favorite sectors right now are in this order: financials, healthcare, consumer discretionary, and I had the technology. And if we're going to see rates beginning to ramp, then every dip in these financials should be bought. Again, I'm not anticipating a jump. I'm just anticipating a slow and steady ramp with probably 2 moves over the next year, and then we'll see what the rest of the world is doing with their interest rates as to whether they add more quickly to that or they just stay on the sidelines.
But, John, when you say every dip should be bought, but you also think the VIX goes a little bit higher, does that mean maybe J.P. Morgan goes down another 80, 90, cents or $1, and then it's a buy?
Well, I mean, if you're somebody who was looking to get in it, I still think it's a reasonable level, even right here. I mean,
under 68.
Yeah, under 68. You know, just look at the times when it's come back down to these moving averages, and it's been a buy. J.P. Morgan basically got up to just within a hair's breadth of 70, and now it's $2 off of that. So it's a pullback. It's just not very substantial pullback. So I would try to be disciplined and wait, because I don't think you have to chase.
Good. Well, I know you don't have much more time, but you did mention tech, so I want to just ask, Facebook or Apple, or what else in tech?
Well, I think some of the, at some point here in the very near future, Micron, Qualcomm, SanDisk. So in other words, not just the old line techs that have, started to percolate up until this recent little sell-off, but yes, Facebook I'd put in there as far as, on any significant dips. I like that one. Just like Mackie, whether we want to view Amazon as a tech player, as a retailer, I kind of view them as both, and that's why I like them on dips as well.
Okay, good. All right. Well, John, you had to jump at half past, right?
I do need to go pretty soon. I'm still looking over my shoulder at where they need to put me for the next thing.
You didn't say wonderful, loving things about Apple, and I'm wondering, does that mean maybe Apple's not so much on the top of your list until it gets a little lower?
Not. Yeah, until it gets lower. But for anybody that holds Apple, I think they're fine. I would be still a seller of calls here, though. And it's, again, not because I don't love it. I do love it. But I would be an owner of Apple and a seller of calls. In other words, I'm looking, or just a seller of puts or put spreads, because I'm not really looking for the catalyst for the stock to make a big jump in the short term. If we go past 2 and 3 months from now, David, in other words, past August expiration into September, yeah, I'd want to be long it. But I don't know where
Do you think it goes
between
to
now and
120?
then. I don't think so. It certainly hasn't been able to break much past 124, 125. So I don't know how much further it goes, but it certainly hasn't shown much willingness to break down through, there on a very extended basis.
Okay, good. John, did you see this paper in the pharma names today, like Teva and Horizon?
Yeah, it came back in those two.
Yeah, these are
and
both.
Those are for those healthcare kind of plays to me.
You like either of these?
I like them both. I don't have them either right now, but I like them both.
Okay, good. Covered calls on Apple. That is a question. John, so right now if a person were long shares in Apple, which options would you be selling against that?
Probably 127s, 128s.
Okay.
Because then even if we go to 130s, you're still probably a break even. You know what I mean? Because you're collecting a couple bucks worth of premium, and so that insulates you. Even though we get to there, it insulates you to there. And 130, we haven't held it much. We've pierced it a couple times, but it's been, the last time was middle to the end of May that we got above 130 and held it for more than a couple days, and even then it was only probably 3 or 4 days.
So would you be which expiration would you be selling those calls in Apple?
Weeklies.
This Friday or the following?
I guess the following, because this one's so short term already. So I'd probably be in the ones next week.
Excellent. Well, very good. All right. Well, any take on Netflix? I've not looked at Netflix for a little while here. I'm not sure what exactly a person is asking about. Any take on what is the earnings? Do we see a sharp dip? I think that the viewer is wondering if we want to buy Netflix here or wait for a drop with earnings approach. When earnings are probably middle of July.
I think that Netflix, as well as Carl did in there, he must have not been happy with their unwillingness to buy back more stock, and or because the two things that lately have worked so well for him are, convincing Apple to do stock buybacks and dividends out to the shareholders, giving money to perfect strangers. He hasn't been able to convince Netflix to do that, and I think that's why he ultimately pulled the trigger or the parachute and got out. I still think it's an interesting stock, but it's been rich for my blood for a while, David. So I'm probably a bad guy to ask about. Should I hold my Netflix here because I don't hold it and I don't own it here. I would only own call spreads in it.
Okay, good. John, last week we got a nice bounce out of some of these names like Biogen and Celgene. They kind of, about 2 weeks ago, they shot higher. They've been kind of pulling back since then. Do you have thoughts on any of these big names?
I still like, as far as those biggies, Celgene I do think is a stock that you want to hold on to. Amgen too, Biogen, IDEC, Gilead, but these are stocks, most of which that have had tremendous runs. Amgen's probably $20-25 off of its highs though, so at $150 stock, whereas BIIB, Biogen, is probably more like I guess percentage-wise it's about the same. The high was 480 and it's trading 404. So, if we look at percentage moves, I guess those are about the same. Gilead is one that, just has not hardly pulled back after this big run into the teens. I mean, it's down 240 today. This is probably its biggest drop in a while.
Yeah, I know. It's interesting to see this pulling back. All right, well, let me ask you then also about eBay. We had some paper. It shot to new highs. But, the thing I was looking at in this one is it made a lower high at 62, and it's not fared well since. Are you doing anything lately in eBay?
I'm not, but I did see, I'm in it still, and I'm short calls against it. But I noted that today I think they said, David, they're going to spin off PayPal July 17th. I'm pretty sure I saw that go by on the tape. So, sometime in the next 2 weeks, 3 weeks, we're going to see the people sizing up positions based on that. And that,
today
I would think, that should be bullish for them. I doubt if I'll hold it all the way till that point, but it should be bullish for them, I would think.
Okay, good. Have you been playing any of these big retailers? We saw paper in like TJX not that long ago, and some of the others have been doing well, like Macy's pulling back from an all-time high. Have you been playing anything in this space?
I have not.
Okay.
I saw the Macy's downgrade today, and we talked to the analyst that made the call, and he seemed to be a pretty clear-headed guy that has made some nice calls. So I
what was his thesis, John?
I think he thinks that their margins are going to get hit a little bit here, David, and that they're in a transition period. He kept using that word transition as their he didn't think that they had as much of a chance to do the REIT as some people are betting on. But he said, obviously if they do that, I'll be wrong with this downgrade. But and so I wouldn't want to be short the name, but I wouldn't mind being in the same position as Apple, long the stock and short, near-term calls, because I think you might get some of that sideways action that he's calling for.
Okay, good. Wait, John, so just the last thing I want to ask you is, what is like the, to be clear, does Greece do anything to the Fed, or, I mean, like, what
I think it pushes it out.
Okay.
I think it does, because especially if they, both sides have wanted to talk tough before, and they have. And it's resulted in this thing being pushed out, year after year after year. This time, it seems likely that they have pushed them to the wall and that there's going to be something that happens this time. And if that happens, then I think rates stay lower for longer because of, that liquidity flood that I talked about. If they push it out till September, which is the next really big payment that's due, then that's, again, augurs for lower for longer, because we'll go sideways with interest rates between now and September, and then the Fed won't be able to move in September because of, the Greek issue rearing its head again in September. So I think either way, we're looking at interest rates not moving a lot, and interest rates being anchored really by other things around the world other than just our economy.
Okay. Well, some
of
the other.
Well, David, you guys have a great one, man. Thank you.
Hey, take care, John.
Thanks, everybody.
4th of July as well. We'll see you before then.
Thank you, sir.
All right, folks, I'll stay here a little longer. I'm going to go through some of the unusual activity that we are seeing. So basically, both Teva and Horizon were interesting. Horizon, this is just, I'm long this stock, and I've been bullish on it for a while. I haven't recommended it for a little while because, it's been just kind of drifting in a tight range near the highs. But it's interesting to see the paper today. The AUG 32 calls bought, so that stands out. But also, SodaStream, I think John talked about this one on TV. This stock looks horrible. Sometimes you see this when it goes up above something like the 200-day, but then it goes right back lower. Today in this name, they're buying the August 21 puts. D.R. Horton, they're selling puts in this name. Now, this is pretty interesting. They were selling the 26 puts in August. So if you look at the 26 line, it's pretty much where we already had this line drawn here. But then they're bringing in about 50, 60 cents. So their break even is down here somewhere. Pretty interesting when you look at all the support in this. Now, home builders overall have been pretty strong. It's pretty interesting to see this. I mean, to me, this is a perfect example of the right way to sell puts. There's a lot of support under the stock. This stock might hold here and just rip to new highs, or it might go down to 26 8.25 or anything like that. There's all support across here. But by selling those puts, they're basically going to, this would require a catastrophic, a pretty major implosion in the stock for those puts to get assigned, or to at least lose money, because you'd have to break through that 26 level and all the way through the May lows, which of course is always possible. But when you look at the overall trajectory and some of the housing data and some of the home builder stocks as well, it hasn't been something that we've seen as much. And let's take a look over on Research Lab, because what we actually see when we look at the home builders is these guys have actually really been coming to life in the last month. Look at their performance. They've outperformed. In the last month, they're up like 7%. That's more than they were in the last year. This is really stepping up, showing some strength here. So, it's interesting for me to keep seeing this. We've talked about it before. And now we're seeing, we saw bullish call buying in D.R. Horton. It worked. We saw good earnings from Lennar. Now we're seeing put selling in D.R. Horton. I think with the market pulling back today, something like home builders, the last time I checked, none of these guys build houses in Greece. So that's something just to keep on your list as well. U.S. Silica. Now, obviously, energy is an area that I have been very wary of. This is a very volatile stock in that space. The July 30 calls were bought. They're looking for it to squeeze higher. I mean, this is the sort of thing where this stock could shoot up to 32 and then die, in my opinion. It's a pretty tricky one. The options are not super liquid. They already ran quite a lot before. You can see a lot of volume there, but this is something that, in my opinion, this is not a great risk-reward. But nonetheless, we did see some paper, so I wanted to point it out. Now, here's an interesting trade that is also not bullish at all, despite having calls. October, 5 short calls were rolled lower. Now, this is a gold miner. I've been saying all along that the commodities really don't look good, and if you look at what's been happening with the Australian dollar, I think it will really help guide you with that. The Australian dollar has a very strong correlation with commodity prices and commodity stocks. And one thing that's interesting, if you guys look back several years ago, we used to see a very strong correlation, for example, between between the S&P and dollar yen, but that's disappeared for several months now. But with the only correlation that I see that still works, it used to be euro corresponds to oil. That's not even clear anymore. The only correlation I still see with currencies at work is the Australian dollar. So I want to just point that out because it has been giving us really bearish signals, and they've been correct on the materials, on the metals, and things like that. Yamana Gold today, they basically these puts were in October. The calls. They were basically short the $5 calls, and they bought them back, and then they sold the 3.5s, which basically means they are just rolling lower short calls, which is bearish. And we've seen this before, and usually when we see this, it's a kiss of death for the stock. So I want to just point that out. It seems like when people do this, they are taking very risky. They are probably naked short calls. This is probably a big institutional investor who really knows what they're doing. You can be sure, or I would suspect, that they have put significant, research and analytics behind this, and they are very sure this stock is not going to rally. Otherwise, they wouldn't be selling short calls against it. So I want to just kind of point that out. This is a continued sort of weakness we see in the gold miners, and we saw these a couple of years ago, and the gold miners were trending lower, and seeing it again today is not really a vote of confidence. And even with the GLD higher today, I think this is really, something to be wary of with the gold miners. To me, GLD here, it has been holding support, but if you look at it, there's a lot of reasons to think that this could kind of bounce higher. But what's interesting is even with GLD, we really have not seen gold miners be able to kind of get their act together. If anything, this is just continuing to look bearish, and that big trade is a really large trade in Yamana. HCA, we saw the hospital stocks rally last week when the Supreme Court ruled in favor of the Obamacare. I guess they're the subsidies that basically is a positive for the hospitals. Nonetheless, big pop in HCA. Today they're selling the July $92.50 calls, basically looking for upside to be limited in HCA. You can see significant volume right there. Also, here's a stock, also home builder related, that we've seen on and off recently, which is St. Joe. This company is a land developer in Florida. They build condos and stuff. It's an unusual company. It's not a traditional home builder, but they own a lot of land. In St. Joe, the July $15 calls were bought. We saw other calls in this one recently. I think this company has significant short interest. DXJ, the Japanese ETF, DXJ, we're seeing the January 2017 calls bought at the 60-22 strike. It's an unusual sort of strike, 60.22 right here, calls bought right there. And then also Yelp. Now Yelp has been a real dud for a while, but it has a lot of short interest. I didn't do an alert on this just because this is a really hazardous sort of stock. I think it's pretty tricky, and I mean the chart looks horrible. Nonetheless, they're rolling 50 calls in July to August. They were already long the calls, rolling them forward in time. Now this costs a fair amount of money. So this is someone who, there's also a good possibility that this is someone who is short the stock, and they're basically using the calls as a hedge against short stock. Nonetheless, it is interesting just to see this trade. It's very large in size, and it costs them some money to do it. LC, Lending Club. This is a stock that we had a winning put trade not that long ago. More puts today, July 16 puts. I mean, this chart is, as they would say in Full Metal Jacket, it's ugly enough to be a modern art masterpiece. This is one of these new stocks, and I think this is one of the reasons why I point out when a company is relatively new like this, I think you really have to be careful trying to bottom fish companies shortly after their IPOs. I'm a big believer in really waiting for them to season. If you don't see a 200-day moving average on the chart, which this stock does not, it means it hasn't traded for 200 days, which means it has not seasoned, and it means to be wary of it. Now, I did not do an alert on those puts just because it was so extended to the downside. Nonetheless, this stock is not a place, in my view, to go bottom fishing yet. The problem with some of these e-commerce things, you really need a sense that the business is really established. And I think when you look at a lot of these companies, it's not really clear to me that the business is established. This just sounds really ambiguous, like it's something that some people thought up. But, in the world of finance, businesses, banks and stuff, these guys last for a long time. And this is why I think it's important. Look at a company like Santander. This was a new company, Santander Consumer. The company was new, but the business is as old as it goes back. This is like the old, Household International. I think this is that. But anyway, this company is a new corporation because it was spun off, but this is an old business. Something like Lending Club is a new business, and it's not a proven business. DAL. The weekly calls expiring on the 10th of July, the $42.50 calls were bought. Again, it was around 5,000 contracts. To me, that's not very significant in a company of this size. Overall, this just doesn't look. This is not giving us any signal yet, in my opinion, that we want to be bullish. I still think that this is a sector where a lot of people have taken profits. It looks pretty much like it's topped out to me, and I got to say, I think this just doesn't look good to me in DAL. I think we really have to wait on this. The areas that do look interesting, which is kind of interesting, is we have seen chemicals have done pretty well, and we've seen a lot of paper and stuff like Eastman Chemical. Well, here's something that's interesting. POL. Now, these are relatively new companies, and I encourage you to do some research on them. I mentioned them because we saw bullish option activity in them recently. Poly One and Platform Holdings, PAH. Both of these had relatively long-term call buying not that long ago. They're kind of interesting. I don't know much about them, but companies like this, the good thing about them is they're relatively kind of uncorrelated to the broader market, and I just want to point them out because very often I have found when you see big call buying in stocks like this, it really means that someone is interested in it, and there's some good reason. Very often we do see these kind of random companies that you've never heard of. Well, if you see someone buy like 5,000 calls in it, that's someone who really there's something there where someone wants to own it. And that's the sort of thing I want to just point out because we've seen both of these names, relatively obscure chemical names. Some of the other ones, I wanted to just kind of mention things like Biogen. These are interesting, and I think we want to just be waiting. It looks like they might pull back a little bit more, but some of these are names that I think if you look at them, these have not rallied much, but these are still secular growth stocks. So I think we want to just keep these on our list. Macy's downgraded today, but to me, when a stock makes a 52-week high and then it pulls back, it's generally interesting. The retail space, you know what? It's just been a good sector. Another one that's been interesting, we mentioned Zoma as a potential long at one point. It shot higher after that. Now it's pulling back. This is also I don't think it's necessarily a buy here, but it is kind of getting into this level. And I think if this holds this level and sits there for a few days, if it holds, it's squeezing here with the 100 and with the 50 and the 200-day coming together. I'm not necessarily just saying that this is something you want to just buy. I don't really know exactly what they do, but if you guys have time, this is one to potentially research. It's interesting when a stock makes a new high. It looks here like it's starting to turn higher. So I want to just point this one out because some of these biotech names have been strong. Some of these healthcare names. Look at something like Thermo Fisher. This was pushing up against the 50-day. It broke above. Now it's pulling back. This is another one that's been interesting. We had some great options paper in that Mikey was talking about. Another area that's been strong has been the restaurants and fast food. Jack in the Box is in an incredibly tight range here. This is one that I think we want to keep on our list as well. This one is interesting. It might kind of bang back down closer to 86 one time more, but this has been a good sector. I also have a list of things I'm looking for. So, for example, if Facebook goes to 86, this is probably going to have some real buying. 86, maybe down to 85, 90. It's interesting. I think this is basically a great cap. It is a large cap, great stock that has broken out to new highs. This could be the beginning of Facebook's move to triple digits, and I'm not saying you just rush to buy it, but this is the current Greek crisis we're seeing. At the end of the day, we might look back and say, wow, that was my opportunity to buy Facebook. We might also say that was my opportunity to buy Deere. Deere basically has had nothing but bad news forever. Now it looks like it's starting to get better. It had some call buying. It broke out. The calls doubled. It was really nice. This stock has a lot of support. I mean, to me, this stock, in this area around 95, all the way down to 93, there's a lot of support here. So this will also give us an opportunity. I have a target of Deere around 94.5, and the other one is TJX. This is one of the great companies of the last several years. And if you look at it, it's basically been pausing. It had this good earnings, and then it gapped higher, pulled back, had some paper, did pretty well. If we look at it on a much shorter-term chart, I think we can also see that there's probably going to be a pullback. But down here, if we get back to these highs from earlier in June, this right around 66, that's my level on TJX. So I want to just point these out because I think these are going to give some opportunities. Now, another one that's been pulling back and we've been talking about and watching that I think is interesting is OPKO Health. This is a monstrous biotech stock that had an amazing run, got slammed lower. Look, this could easily chop back around, back down closer to this line, which is at 1520 or so. But this stock is, this is a thing where it pulls back and it starts to stabilize. It starts to work sideways. It's starting to kind of put the pieces together to start stabilizing and working higher. So, it might drop down a little bit more, but now we're starting to see this. And this is a great company, and it's had this amazing run and a nice pullback, and it looks like this could be a nice level that we want to be owning OPKO. Another one, here's a biotech. I don't know very much about this stock, but this is interesting because I first wrote about this stock earlier in the month when they were rolling short calls higher. It exploded higher after, and now it's pulled back. But if you look at this one, Insys Therapeutics, now it's pulling back near its highs. Again, this is one that this might take a little bit of a dive lower. It might go down here closer to 30 or 31, but this stock has also been a monster. So these are ones that, unfortunately, I don't always have time to do as much research into exactly what the catalysts are because I do a lot of stuff with like the homepage and everything for Option Monster. But I do see the pullbacks and I do follow specific stocks. And I look at some of the things that Research Lab tells me in terms of pullbacks and stuff. In fact, I have this scanner that I have created. I call it bullish pullbacks. And what it basically does is it looks for stocks that have been trending higher that have pulled back, and there's INSY right near the top of the list. So let me take a look at some of your questions. I'm sorry if I didn't have a chance here to do that earlier. United Healthcare, UNH. This is in a bullish triangle, but I think it gets closer to 120 at this point. You also want to see when earnings are. Earnings are close on this. I'd really, to be honest, I think this could go back under 120, and I'd be looking for that myself. UNH. Netflix, any take with earnings? Like in this stock, I think this is also a stock that the best thing you can hope for in this is a bad earnings report, or basically it reports good earnings and people still just kind of sell it. This stock, if we look at it, it could continue higher, but when I look at it, I don't like the risk reward of it here. It has bearish divergence on the MACD. It has this ugly candle. This is a potential reversal pattern if we look at these two candles up here. It's something of a double top around 700, and on top of that, one of the reasons it was a double top was it basically gapped higher on the news of the stock split coming, and then it just moved lower. To me, this actually looks a little bit like Apple did earlier in the year. I think Netflix here might actually be pulling an Apple, which is go to sleep and do nothing. So for me, Netflix, I'd really wait for this stock to go down lower, and I think this is not really an easy one to play right now. Thoughts on GE? I'll tell you, I thought this was going to run higher. At this point, I did not really properly position for the Greek thing, and I was mostly in cash. I thought this is a stock that was going to move higher. I bought some inexpensive calls, which I actually cited as an opportunity, I believe, on this webinar. To me, this is the reason why we like calls and things like GE. This is a sort of thing that if the market were higher, I think this stock would be over $28. But this is highly correlated to the broader market. And at this point, it looks to me like GE could very easily go back down here closer to this level, the high from late February. And that's what I'd be looking for at this point. So I will have a loser on those calls. Do you think we can melt up into the holiday? Well, normally I would say yes. But I think with this Greek thing, it's just there's too many things here that are unclear to me. And then we have the other situation of melting up into the holiday. There's several other things on the calendar, which is a lot of economic news. Tomorrow we have consumer confidence. Then we have the payrolls report. We have the ISM on Wednesday. And then we have all the economic news of payrolls and jobless claims, which I need to add here. Let me add this. Let me take away I just put payrolls. But basically, there's a lot of other events coming up. So I don't really know if this is your normal holiday melt-up. I thought it was going to be. I thought Greece was going to be finished by now. This is something that's really complicated because I first looked at the calendar, and I thought it looked to me like Greece was going to have defaulted by now or solved the situation by now. Instead, they just jumbled around a bunch of these maturities and a bunch of these dates. So, this is something that I looked at the initial calendar of events for Greece. I made decisions based on that. And then, what can I say? They literally moved the goalposts on me. And, this is to me something that it just wasn't clear. I thought the Greece would have been resolved by now because I thought that the crunch time was earlier. There were several dates I marked on the calendar earlier. So to me right now, I think we need to kind of have people say that it's over. So that is unfortunately the way it's panning out. The thing is, I really try to pay a lot of attention to the calendar. I'm always studying it. That's the reason why we created this integrated calendar on Research Lab, which basically, integrates economic news with earnings and stuff. It works most of the time. The problem is when people don't obey their own calendars, like the Greeks and the Europeans. So unfortunately, that's just the way it's panned out. Let me see. Priceline. Do we see any traction? PCLN. No, it looks horrible. This is a bearish triangle breakdown. I think this stock goes lower. I've been relatively bearish on this stock for a while. I don't see anything good about this chart. This looks like to me it's going back to 1,000 and possibly lower. I would be buying puts in this and looking for continuation to the downside. I don't see any support at all until we get down. The next potential support is here around 1050. I own a put spread on Netflix. Should I wait for time decay or close now? The 2nd of July. So you own the Friday put spread, 660, 650. Oh, you've done very well. Well, let me actually see, because $660, $650. Looks like it's expanded about halfway. I think you should. Yeah, it would make sense to me to close it. I tend to, I'm not really bearish here, and I think that we still have the greater risk of moving higher. And if that happens, I mean, Netflix could go back up to like 655, or something. So it always makes sense to take profits when you have a winning trade. Waiting for something like time decay is almost always a bad idea. So in this case, I think it makes sense to ring the register. Now, another thing you can do, and which Pete says to do, for example, sell half of it and then take the other half, and then basically whatever it is, whatever the value showing on your positions page is, you can basically set, a limit sell order at a wider level. And then what might happen is, as the market shifts around and prices move, you might get filled. And then you might be able to set a level that's relatively aggressive. And then one of the contracts moves or something happens, and then suddenly, boom, you get filled at a good level. So I would say sell half and then set a limit order at a more aggressive price, and then you might get it. eBay. I personally think eBay here is, I don't like the look of this chart at all. I think this will go back to 58. I think there's a lot of news priced into this stock, and John was saying he was long stock and short calls against it. To me, I don't think it goes down a lot, but I don't like this lower high. That to me is a big problem. We see now a lower low right here. It's making a lower low. It's not quite lower, but a lower high following a breakout to me is not a good sign. So I think this could go back down to 58. Which financials? All right, solar got hit hard today. Anything in that sector on your radar? I really don't like this. I had thought about Canadian solar, and instead it's completely broken lower. This whole sector is totally damaged. And another problem with this is, whatever is going to be happening with China here. So the thing is don't forget solar is a Chinese industry, and there's something really not good happening in this whole sector. So I would totally avoid it. One of the things I will point out is that if you look at the overall solar space, it had a huge sell-off in 11 and 12, and then for the last two, it really rallied hard in 2013 and early last year. But now it's petering out again. So I think it's solar. I think you need to look at the broader chart, and to me, it looks really not good at all. I think this is an area to totally avoid. I think right now, John was saying his favorites were financials, technology, consumer discretionary. For me, my favorite here are retailers. Retailers right now pretty much at the top of my list. That's the place I'd be looking. And then some of these names like, the home builders I think will be interesting. I'm not sure yet if they're ready. Something like the ITB. this is still pretty heavily bought. This to me might still pull back. If you look at this chart here on the short term, this looks like to me it might get back down one more shot closer to the 27 level or the 50-day moving average. That would be the sort of thing that I'd be saying. But right now, in terms of solar, I think you're just in a bad sector, and you don't want to buy a good stock in a bad sector. It just can go against you. What financials do I prefer? It's interesting because Bank of America is a stock that I've hated, but I'm a customer of Bank of America, and I have to say that they've been doing some stuff recently that I'm actually very intrigued by, and I would not be surprised if Bank of America turns into the turnaround play. They seem to be actually figuring out how to be a good company, and there might be some stuff happening here. So at this point, Bank of America is not broken out yet, and I'm not necessarily saying it's the one to go for. To me, J.P. Morgan, it has broken out, and at the end of the day, that usually is what you want to see. So to me, I think something like J.P. Morgan and Goldman, these look like the two best right now, in the sector. Intel, is it interesting around 30? There's something deeply wrong with Intel. No, I think it's going to 28. This stock is looking really bad. It's under its 50-day moving average. Everything about this still looks pretty ugly to me. So this is not, in my opinion, a buy yet. Costco, interesting. I haven't looked at this one for a while. A lot of these retailers look like this. This is what TJX looked like, or this is what Ross Stores looked like before it started working higher. I think the problem with Costco is that Costco might still take one more dive closer to 130. I'm not sure. It doesn't really have a really clear support, maybe 135. We're starting to see the MACD working higher. I think in this stock, this is an example of, to be honest, something like TJX. TJX broke higher. It made a higher high, and now we're going to look for it to hold the old support. And I think with Costco, we need to have the patience as well to look for it to break over 140 and then hold 140. Because the thing is, trying to bottom fish it here, there's really nothing yet telling us now is the time to buy it. And the problem is, when a stock's like this, it can just keep skidding lower. So Costco, to me, I just don't see anything yet that makes me want to be getting interested. Actually, I wanted to add, Tuesday's guest will be Ron Ianieri. Let me just note that down. It was good to see Ron out there in San Diego. Okay, folks. Well, those are the main things I want to talk about today. It's interesting the pending home sales were weak, but that's really, of all the housing numbers, that's kind of the least important. At this point to me here, the question is really, when you look at something like the S&P 500, where do you think support is? Do you think this level holds? This to me is very ambiguous. It's really not clear. You can make arguments here about this is now like breaking lower. We've broken the uptrend. All these things are, to me, very much potentially true. The bigger question, though, is we have a lot of economic data coming up, and then we have earnings season. So if anything, in my view, this earnings season is the time that you'd actually be expecting relatively bullish guidance. When you look at the direction of the economic numbers recently, it would seem, if anything, that now we might actually start to see, something in terms of the earnings. So I want to just kind of point that out. At this point, we still haven't really done something really ugly bearish yet. Most big corrections are going to start with a breakdown and then some kind of failure under the previous zone. And at this point, we haven't seen that yet. So I just want to kind of wait and see. And also, if you look here in October, when we broke down to the 200-day moving average, we were basically languishing for over a week at the 100-day. So the question here is, do we just keep going straight down to the 200-day, or do we chop around here and then go down? I don't know. I'm just pointing out some of the different situations. I think this is just a really, tough thing right here. Technicals mean a lot less than normal right here. Technicals mean a lot less. dates and timing mean a lot less, and data means a lot less. It's unfortunately just a very strange time that we're in right now, and I think we just have to kind of wait and see. But I think one of the reasons, what I'm trying to say at the end of all this is, I think if you wait for something like Facebook to give you a little bit more of a pullback, I think the risk reward in some of these names is the way to be looking. So anyway, I hope everyone has a great and profitable end to the trading day. Ron will be with us tomorrow. Take care, folks.